we will go over the euro-US dollar intraday trade. The short trade we were trading to the downside, as you can see, with our entry, with our stop loss and with our target at 2 times the risk. So this is the 15-minute time frame today on the euro-US dollar, and before we continue, we will of course start with the hard time frames, and I prepared some charts for you, for those who are just following me on the YouTube, and for those who are in my mentoring program one-on-one. Of course, well done to all the traders that were trading the euro-US dollar and GBP US dollar today. Now let's jump to the charts. So first of all, we'll start with the daily time frame, and before we started with the London trading session today, this is what we saw. First of all, you have to start your analysis of the daily time frame. This is very important for you to understand the overall market direction. So on the daily, what we saw was of course this lower high, which was confirmed here, and yesterday, as I wrote here, we also had this bearish daily candle close. Now this is just confirming, signaling that price may continue moving lower today on this daily candle, and the swing lows, the next support, were down there, in combination of course with some previous lows here. So of the daily, we said that we want to start looking for potential short trades ideally, and this is everything we have to know from the daily time frame. Continuing to the 4-hourly time frame, this is what we are looking here. So just by focusing on the price action itself, you can see that market was in this bearish down move direction. Previous swing lows were broken to the downside and market was retracing. So as I wrote here, you can see that 4-hourly price action was bearish, of course with lower low, lower highs, and of course on the way to the downside, market also formed these fair value gaps, in other words the imbalances, which can serve as a potential resistance as well, especially when you combine that with the swing highs and swing lows. Now moving to the next chart here on the 4-hourly, this is what I meant by swing high and swing lows. So when you are having like imbalance as on the hard time frame, as on the 4-hourly time frame, then of course you have to also put focus on the swing highs or lows, in other words the buy side or sell side liquidity within those imbalances. Because when you have, like in this case, the 4-hourly candle high, swing high, swept as we had it here, as you can see, this is where you have to pay close attention, because if the market is starting to push to the downside and you have like lower time frames, market structure shifts, then there is a high chance that price will try to continue moving lower, trying to achieve these moves to the previous sell side liquidity levels in this case. Now if you go also to the lower time frames, such as 1-hourly, you can also see, just by looking at the raw price action, you can see that also the 1-hourly was clearly bearish. All those previous lows also from yesterday were broken. Market retraced back and it swept this hard time frames 4-hourly liquidity in combination with the Asian session range as well. So in this case, this is just an extra confirmation of the bearish structure. Now continuing to the 15-minute time frame here, that's where we were looking for potential trade. Why? Because as I said, the 4-hourly liquidity, the buy side liquidity and the Asian session highs were taken out. Price swept this liquidity, and then once this hard time frames liquidity was swept, we had nice shift to the downside. Previous short-term lows were broken. We had this bearish imbalance confirmed on the 15-minute time frame, and we had nice, as you can see, confirmation with our entry here, stop loss above the structure, and then we were looking for 1 to 2 in terms of risk and reward ratio on this trade. Why? Because the price was very volatile. After the news came out, as you can see, price even pushed to the downside, but you never know what will happen after the news. as the news came out, and in this case we were happy with classic 1 to 2 in terms of risk and reward ratio. So make sure you review this video again, because if you follow the same steps every day, every week, how you approach the market, to understand the market, and how you actually prepare yourself for the potential opportunities ahead, then you will understand how to manage the risk, how to look for trading opportunities, and how to manage those trades with the right trading mindset. So hopefully you learned something from this video. Make sure you check it again, and thanks for watching, and we catch up soon. Take care.